morning, all. I'm Epstein, and here we are with your morning flash update for Thursday, and we're at the 10th now of October, 2024, 8:25 a.m. Central Time. And with that, let's take a look at the morning news before we get too far along here. We had the CPI numbers come out. They came out up 0.2%, double what was expected, and equal with what it was back in August. Consumer Price Index, they expected it up 2.3%. They got 2.4. Core ex-food and energy CPI comes in at 3.3, a tenth higher. So we are running a bit higher now on the inflation, which doesn't bode well for the Fed to make that cut in November. That's all that my point is here. When we drop down to the jobless claims, well, this is good for the Fed because the claims went up 33,000 and continuing jobless claims are rising as well. They're up 42,000. So I call this very much a mixed bag in the marketplace. We step over to the markets today, and remember, this is ex-Milton. We don't know all the damage yet, but it doesn't look good. Where the Rays played, the roof fell off, and that was going to be a place that was housing, if you remember, a staging area. Thank God nobody was in there that got hurt. You are looking today at the stock market backing off a little bit, but you're coming off record highs in the S&P and the Dow, so getting a small pullback doesn't mean a heck of a lot. The dollar down fractionally, down 0.85, and most of the currencies getting a bounce against it. In the metal markets, you just beat the heck out of the gold. You took it back down towards 2,600. Silver market still staying mid-30s here, trying to pop a little bit. In copper, I wouldn't be surprised if you get a little bit of a bounce now. And the reason that I say that is the market's going to start anticipating what Saturday's meeting is going to look like as China comes out and tries to straighten out what the Planning Commission did with a terrible meeting where the markets went into a tailspin because of it. Then we step over here to the bonds and notes. You just keep adding yield in the back end. You are looking at that. Now, the front end is holding. The back end is grabbing it. I guess that's the normalization of the curve yield, too, as well. But this is a new low on this current break for the bond market. When we step over here and go over to the grain markets, it's harvest season. If you're going to try to make something during harvest, you're in trouble because what happens is the markets often break right here as you get supply coming. And if that supply, does the farmer have area to store it? That's one thing. He can hold it back. Another, if you've been in a bear market and you get a bounce there, he likes to dump it and get rid of it. Why store it? Maybe it's not going to go anywhere for him. So you're in one of those funny periods. We'll talk about this and a heck of a lot more as the day progresses when we get to our evening updates tonight. I will catch you all there. You have a great trading day.